Hello, everyone, and welcome to another roller coaster ride as we just get through another beautiful day in California. Hopefully it's nice and hot and you can get refreshed accordingly. So what's happening? Quantitative easing and its effects on interest rates. So we've been talking, right? Me mostly, but thank you for listening. What's quantitative easing? So this is a little cartoon that I found online. And basically the feds, right? They're spending all this money, but they were investing it in mortgage bond securities and a lot of other things in regards to the stimulus package as well, to ensure that the economy stood afloat. Now, each country does different things in regards to making sure they keep the value of their money, because inflation, right, means it costs more money, which means the value of your dollar goes down. So when the Fed started talking, right, we're talking about, hey, is inflation transitory or not? Well, I don't think it is. I think they also agree that it's over 3%. So something needs to happen. So when the economy is booming, 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 what happens to interest rates? Interest rates then go up. So the conversation now is, hey, do we continue to invest in these mortgage-backed securities? And we're going to start tapering. So they weren't going to have this talk until August and then start tapering in probably 2022. But with inflation increasing the way it is not going transitory. Right? So Yellen, who is now the Treasury Secretary, she used to be one of the Fed boards between 2014 and 2018. You remember those, right? So she has some experience in regards to, hey, how do we manage this? So the interesting thing is, right, because we're the people here and we want the best for us because we're self-serving individuals, right? But this is what she says. She says, hey, if we ended up with slightly higher interest rates, it'd actually be a plus. That's a plus. I don't know about you, but I like rates to stay lower as possible, because then I have a harder conversation with my clients going, hey, this is the market, the rates are going up, and I'm here to support you every part of the way. Because with inflation, what does that mean? It costs more money to get the same thing you used to get before, right? So currency alternatives like Bitcoin and crypto and gold, they're remaining resilient with the fact that the reserves may start quantitative easing, start to reduce that. And that's Skybridge Capital, a $7.5 billion hedge fund, okay? So the other thing that many people have noticed, because they have these currencies, is that they've had a substantial correction. And as a result, Troy thinks that, hey, we're gonna be more resilient in those alternatives as the feds decide when, we don't know when, they're gonna do it. So when all this news comes in, investors are like, oh my gosh, what should I do? What should I do? Buy, sell, buy, sell, buy, sell. And that's what fluctuates everything. Because yesterday we saw we lost 59 basis points yesterday, and today we're up 30 basis points. So what does it mean? If you're refinancing, you have time to what? Wait and see how the market's going to trend. But as you can see with all of these trends here, right? Now we have a new floor of resistance, right? And if we need to get back up so we can get lower rates, we're going to see how that transpires with all the other news that's going to be coming, right? So S&P is down and the 10-year treasury is down down at the 1.51, right? So remember, the higher the number this is, what does that mean? That means you lower the interest rates. And in this case, this is not as high as it used to be. And remember, we're using the 2.5, where a few months ago, we were using the 2% bond, right? Because rates were in the higher twos, right? So any questions or concerns, give me a call, 619-846-2675. And can you do me a favor? I have a YouTube channel. This video has another video at the end. And if you press YouTube, I need to increase my YouTube. Give me a like. I appreciate you. Stay safe.